All right, today I get to do something fun. We got the CareWise page here, and we've got my baby, the VA pension eligibility calculator. I've gone through a few iterations of this. First one came out a little over 2 years ago. We were able to take service history, some care needs, some things of that nature, and be able to tell somebody roughly um, what their eligibility was for the program, but we weren't calculating estimated award amounts. So I'll start with a disclaimer. This is for educational and illustrative purposes only. The sole authority for determining eligibility for VA benefits is the VA Benefits Administration. We provide a link on the website here for you to learn more about the program. That said, there are a few known limitations with this calculator as of this recording. So obviously the rates and award amounts are specific to the published 2023 rates, do not reflect any other years. Housebound rates are not reflected in this calculator. So there's aid and attendance, and there's also housebound. Rarely do we come across housebound, so it's just not something that's coded in. Also, rates for two veterans together are not reflected. Again, it's at least in our case, working with elderly and physically disabled, it's not something we come across too often. Additionally, there is one presumption made before you go into the calculator. That's you're at least 65 years or older, or have a permanent and total disability. That would be SSDI, VA disability. You're a patient in a nursing home for long-term care because of a disability. So think assisted living, or like a long-term skilled nursing. Or you're getting Social Security disability insurance, or SSI. So long and the short, 65 or permanent and total disability, think VA disability, resident of assisted living, or getting SSDI or SSI. So a very small percentage of people that are looking at this program don't meet one of those criteria. So starting off, we're working on the presumption that there was an honorable discharge. So we'll say honorable. First day of active duty before or on September 8th, 1980. That is relevant due to the period of service requirements before and after 1980. A lot of our clients served before. We'll go ahead and click before. There is a requirement for at least 90 days of active duty, at least in that period. With one of those days being during a period of declared war, as defined by Congress. So Gulf War has not ended yet. And we've got the Korean conflict, World War II. Now keep in mind here, Vietnam is broken up into two different eras. If you served in Vietnam if you served and you did not serve in the Republic of Vietnam prior to August 4th, 1964, you wouldn't be eligible. However, if you served and you were in the territorial waters or in the Republic of Vietnam during that 55 to 64 period, you would be eligible. So there is a demarcation. Any service dates after August 5th, 1964, like the other periods, you could have served anywhere. There's just that one carve out for Vietnam era. Real estate. You can own a primary residence on up to 2 acres, and it does not count as an asset. Additional real estate would count as an asset. Acreage on your associated with your primary residence above 2 acres could count as an asset. So it depends on a couple factors. One, let's say you have 1,000 acres, that's going to count. Let's say you have 4. Probably not going to count in a lot of situations because it has to be marketable, and then also it has to be easily divisible. So on a 4-acre plot with where a house sits and driveways are and things of that nature, it may not be easy to carve out that additional acreage, say 2 in the case of 4, and end up with a marketable parcel of land. So in that case, it would not count. There are some other scenarios where that additional acreage would not count as well. But we're going to say yes, we own real estate, let's say a primary residence. We're going to asking if we own other real estate other than a primary residence. No. Are your total assets, excluding primary residence, above or below the current VA limit of $150,538? So again, we're not counting a primary residence and any value associated with it if there's not additional acreage being counted. If you are above 2 acres, just reach out. We can kind of talk about your scenario. Additional real estate, the value of it would count now, and that would be not just the total value, but value less any mortgages, liens, things of that nature. So what would count towards that VA asset limit of 150,538? So cash, if you're declaring cash, gold coins, silver coins, things of that nature, if you have those things and you're declaring them. Checking accounts, savings accounts, money markets, CDs, new visitor, retirement accounts, cash value of life insurance policies, all of those things that you think of as liquid assets or easily convertible to cash type assets, those would count. Often we have a question if assets that are in a trust count, and that depends. It depends on the type of trust and when the assets were transferred to the trust. If they are in a revocable trust, they count. If they're in an irrevocable trust, it depends when they're placed in. If they're placed in the trust during the look-back period, then they're going to count. If it was prior to that start of that look-back period, then they're not. So let's in this case just say we're under, as most applicants are. There's different rates for married and unmarried veterans. So we're going to go ahead and say married. Who's the claimant? So there's 2 types of claimants for these VA non-service connected pension claims: veterans and the surviving spouses of veterans. So we'll say the veteran. Both claimants qualify off of the veteran service, but a veteran can be a claimant themselves, and so can their surviving spouse. So we'll say the veteran. The VA does not have an income limit. We've gone over the asset limit. They don't have an income limit. What they do is they have a calculation, and that is IVAP, income for VA purposes. So the formula for that isn't too terribly complicated. They basically take your total gross monthly income. It's annualized, so they're working with annualized figures, but we can talk about it in monthly figures. Take your total gross monthly income. They subtract any unreimbursed medical expenses above 5% of the max annual pension rate. Put that into a monthly. And that is your income for VA purposes. So let's do an example here. Let's say that husband, wife, total monthly income $3,000, and the veteran is needing assisted living, and as is typical, the cost exceeds monthly income at $3,500. There's 2 different rates. There is the non-service connected pension rate that does not require somebody to be in assisted living or need the care of another. That's the basic pension. So essentially what that is trying to help veterans that served during a period of war from falling into poverty. Additionally, there's what's called aid in attendance, and that's what this program is often referred to as simply as just aid in attendance. The criteria for that is requiring regular assistance with 2 or more activities of daily living, Regular could be as your frequency basis is weekly. Doesn't necessarily need to be continuous or daily.
New visitor.
Or every time. Assistance could be hands-on, so it could be somebody needing hands-on assistance. It could also be somebody who needs what we call prompting or supervision, typically more associated with dementia, or in the case of somebody who's a fall risk, they can generally do things on their own 99% of the time, but there is a risk there that requires somebody to supervise, so that could qualify as assistance. 2 or more activities of daily living. Think of it as mobility, transferring, bathing, dressing, grooming, eating. Those are kind of activities, fundamental activities of daily living. So generally anyone looking at assisted living is going to require some level of regular assistance with 2 or more activities of daily living. And that's it, we get a result. So the result in this case is the max award amount for a married couple where the veteran, it requires aid and attendance, so $2,642.83. Easiest way to think of this program, because there is that 5% of the max annual pension rate that factors into the income calculation, easiest way to think of it is if you were spending, in the case of assisted living, and other things are unreimbursed medical expenses too, insurance premiums, co-pays, out-of-pocket expenses for medications, medical equipment isn't going to be it's kind of a one-time calculation. The VA is not going to assume you're buying a hospital bed every month, but there's a lot of expenses that fall into this category, offsetting income. Easiest way to think of it, think about $100. If your unreimbursed medical expenses are about roughly $100 more than your gross monthly income, you're going to get the max monthly award. Right here, all throughout this video, we've had this chat now window. At any time, if you've got a unique situation or you're unclear how to answer something, click the chat now button. One of us is available, I will not say 24/7, but during general business hours, Monday through Friday, 9 to 5 Arizona time. Additionally, we do receive messages if we are away, and we'll try and get back to those as soon as possible. So reach out to the chat or give us a call at the numbers listed on the website, and we'll be happy to answer any questions you have. If you are a veteran or surviving spouse or family member of a veteran, I'd like to thank you for the service.
New visitor.
And have a great day.